Hey, Kyle, welcome to the show, brother.
Hey, Corey, thanks for having me on. I'm excited to be here.
Today is kind of a neat story of what we're going to talk about. And I think this is something that I don't feel like a lot of people really dive deep on and understand what it really is. And that's asset management. And, but before we do that, though, I always love everybody to kind of share their story or I call it the hero's journey of, how did you get started and what do you think most people are lacking in your opinion?
Yeah, so I got started investing in real estate back in 2010, but not really into multifamily syndication, which is what I do now. And until 2017, I had a full-time W-2 job. And to be honest, I got burnt out, started looking elsewhere, read all the books everyone talks about, Robert Kiyosaki's Rich Dad Poor Dad, CASHFLOW Quadrant was actually the one that changed my life. And I was looking for something else to do. I found multifamily, joined a mentorship group, and 11 months later, I left my full-time job to pursue this full-time, even before we got our first deal. And then 3 months later, we got our first deal under contract. And now 2 years later, we've got 4 deals in the Arizona markets in multifamily value add. And what I think most people lack
brother.
Thank you. Appreciate that. And then, what most people lack is just consistency and persistency. I think, there's just such a need for things to be, immediately getting done for people nowadays. And that's just not the way real estate really is. It takes time to build relationships, to understand what you're doing and to build a business. And, it's not instant gratification. I always tell people it's not get rich quick by any means, but it's build wealth over a long period of time. And as long as you have that mindset and you consistently grow and you're persistent with what you do, you're going to beat out 95% of the people that are your competition.
Don't you think that's true? So when I look at the single family game and my brethren that are slinging single family stuff, it's this, the fortitude is different, right? Like when I look at guys that are buying, like in this side of the coin on the multifamily side, the patient level is way higher, right? Like you go on the single family side and it's just like, gotta make a quick buck. And they're always trying to turn a quick buck. And on the multifamily side, it is really it's like you got it's not a microwave, man.
Yep. I mean, it's single family is very transactional, right? It's one deal at a time, very transactional. It's like flipping houses. I guess you can look at multifamily value add as kind of flipping, but it's long-term flipping. And it's really building equity and wealth over a long period of time. So absolutely. And which is one of the main reasons why I got out of single family and more into multifamily.
Yeah, I just find the temperament's totally different though, too. And the outlook, right? Most multifamily guys that I know of understand that it's a longer play. Mm-hmm. But at the end, it's not just get rich, it's get rich. Yep. Make millions of dollars, not just a quick 20,000.
Yep, 100% agree. 100% agree. And you have to have that mindset coming in here because if you don't, you can really burn yourself.
I always equate it to one of my favorite sayings, bro. The bull on top of the hill with his son. Have you ever heard that?
I have.
Hey, Dad, let's go run down there and go get that cow. No, son, let's walk down there and get them all.
Exactly. Love that.
Oh, so we want to talk about today asset management. I think this is a weird word that people always hear about, and they look around and think they understand what it means, but most people don't.
Yep.
And so I want to dive into what you believe asset management is, and then what are some of the minutia stuff that really is in that business model? Like, what does an asset manager do? And, how do they how does the game work?
Yeah. So I think a lot of people that get started are hoping to buy a property and then hire a third-party property management company to manage their property. And then they're done and they can move on to the next property. And that's a big mistake. I think in the last 10 years, people probably could have gotten away with it because the market was so hot, it was so strong, and you can do almost anything wrong and still make money. But in a day and age like we're in today, you need to manage your property manager. And that's what an asset manager essentially does is he or she manages them to implement your business plan. I mean, essentially you're handing the keys over to a multi-million-dollar business, to a property management company that's going to make 3% on your incomes. And that's it. So there's nothing really driving them to execute your business plan at a high level. And so what the asset manager should be doing is holding them accountable, building systems to hold them accountable, identifying bottlenecks where they need help in their improvement, and then managing the business plan is essentially what it is.
That's exactly what it is, in my opinion. And it's so often what I see from a lot of new people, especially when they get started, is they look at, they don't even know what to expect, or like, that's really the problem is when you're new, you're like, well, I don't even know what I don't know.
Yep.
Right. This is why I strongly encourage most people to start with a mentor or like partner with someone that's like, and take and get what you get, right? Like, even if you got to take a little piece of a deal, even if it's your own deal that you found, like partner with somebody to learn this part of the business because it really is learned, right?
Yeah, I mean, I said earlier, you're managing a multi-million-dollar business. And so if you've never been on the management and operations side of things and you're just going to take over a property, there's so many moving pieces to managing a multifamily investment, especially when you're taking other people's money, right? You need to understand that piece of it. And so I always tell people, get into your first deal not to make any money. It doesn't matter if you make $0. You're learning the process to make sure you can execute your next couple of deals and take care of your investors' money.
It's the price of admission, just to get in and learn to play and try to get it with someone that's playing at a higher level, in my opinion, because like if you don't, you're going to go and find a management company that you think's good, You don't even know the questions to ask of whether they're good or not, truly. And then they're going to be giving you their business plan.
Yep.
And it may not be the recipe that's award-winning.
Well, that's the thing about setting up the right systems is the systems actually allow you to ask the right questions, because you don't know what you don't know. And so if you don't have those systems in place, you're kind of just guessing at what the issue is going to be. Yeah. Whether it's, hey, how many leads are we coming in and how's the conversion rate and where's the bottleneck between that? If you only know that there's 50 leads coming in and 0 leases, you're going to assume, okay, they're not doing their job, but why? And there's different buckets and sections that you can focus on to be able to identify where they need to improve. Maybe it's improving the leads themselves, or maybe it's calling them back quicker, or maybe it is that the leasing agent themselves is just not doing a good job. But you need to ask the right questions to get to the answer quicker.
Yeah, I love this. So let's do this. Let's kind of go back from 50,000 viewpoint and go, here's what asset management is as far as I think I've got a new deal. What does the asset manager kind of do in that part? And let's kind of drill down to now we're maybe getting into operations, and let's talk about some of your metrics or KPIs that you guys monitor and are really, and then probably some of the systems that you put in place for managers to follow. Can we do that?
Yeah, absolutely. Let's do it. So 50,000 foot level. Do you want to start there?
Yeah.
An asset manager. So, we manage our own assets. And so we're kind of an A to Z shop, less the in-house property management company. So the reason why I like that is because we're implementing the business plan and thinking about the business plan from the very start. As soon as you underwrite a deal, as soon as you're touring the deal, and then you're tweaking it with your property management company. But even before you close, we're sitting down with our property management company, setting expectations, setting timelines for renovations, setting budgets, even applying for certain permits that maybe take a little bit longer so that we can hit the ground running on day one when we close. I think a lot of people close and then they try and figure out what the next steps are. And here you are a month, 2 months in, and you haven't even gotten anything going. And that is lost time. The goal of our business is to drive the NOI as quick as possible and get the property stabilized. So from a 50,000 foot view, that's what you're doing before a deal. And then once you get into the deal, you should already have those systems kind of set up. If you are dealing with a new property management company, it's not always easy. You got to get them on board, but I think it's important to talk to them before you even hire them. Say, hey, look, this is how we work. These are the things we do. Are you okay with that? Because certain property management companies are very stuck in their ways. They're very archaic.
Yes,
this is what we're going to do. This is the report you're going to get, and that's it. And so we like picking a property management company that has a lot of infrastructure, is flexible in how they report and how they work with their investors and their clients, and that's what we've done. And so we've stuck with one property management company. They understand what our systems are now, and so we work very well together with them then.
Yeah, I think that's the key component right there is understanding that. And the flexibility, right? Because if they're too rigid, then they're just saying, listen, I don't care what you guys think. We just do it the way we do it. And you either like it or you don't. Well, that's not the right answer. And because every recipe for every property is a little different, right? Because when you get into it, you're like, okay, well, this one needs this much CapEx. Here's the building. We've got half of them are renovated, half of them are not. What's our occupancy? How are we going to handle, rehabbing this thing and bringing it and doing this value add repositioning and still keep, the occupancy up? And it's all the juggling pieces, right? We're spinning plates the whole time. That's really the job. And then as the asset manager, it's not that you're the one that actually is getting the plate and spinning it, but you're the master puppeteer. Mm-hmm. You're in control of the whole thing, and you've got to look at it and know that everybody's got a responsibility. But I love the way you said it, Kyle. The key piece is setting expectations way in advance.
Yep. Even now, cringe when I see a post on Facebook saying, hey, I just got a new deal in Louisiana. Does anyone know a property management company that we can hire? It's like, man, that's the first thing that you should be looking before you even go after deals in your market is you got to understand who the person is that's going to execute your business plan. Because if you pick the wrong person there, they can kill your deal immediately. And look, property management is a tough business, very small margins, and they're just not always very good. And it's tough to find a very good property management company. And I always like to give the example, if you drive your income by $100,000 at your property, that's huge, right? But the property management company is only going to make $3,000 to $5,000 off that. So they just don't care enough. And so if you're not an asset man, if you don't pick the right property management company and you're not asset managing your property, you're going to lose tons of money because no one cares more than you.
No one cares more than you, right? And really the other part of that is timing, right? And listen, I've made this mistake too. I've been doing this for 10 years. When I first started, I didn't know, I just jumped in my first deal by myself in the water, right? And you're like, wait, this doesn't feel right. And then, and eventually you learn, you grow to the point where you start, that it is up to the owner to set expectations and to set the drive and really the game plan. Because and you're a good management company wants that from you as well. Then they'll help assist you with it too, right?
Yep, absolutely. Absolutely.
Yeah. They'll come in and be like, okay, so here's our opinion, but they're also going to lean on you as the owner and say, well, what do you want to do? How much money do we have to spend? And, where's the right place to spend this money? And then you guys all come up with a good business plan. And this is where a lot of people don't understand this. This is all done before it's right. It's really done in due diligence. Wouldn't you say This is when you're really putting it together?
Yep. You find out some stuff during due diligence. A business plan is ever evolving. Even when we own the property, you're going to pivot a little bit. Are you getting the rents? Maybe you can back down on the interior renovations and still get the rents. But yeah, you're evolving that thing, starting at due diligence. You should not close on a property and not know what your budget's going to be for certain interior renovations and if you can afford that. And then digging a little deeper, when you're working with a property management company on construction, if they just know they got $1 million to spend on interiors and they just start going at it like crazy, a couple months down the line, they could have burnt through every dollar of that.
Overspend every dollar. You've got to control 100%. That.
Yep, exactly. And so there's so many moving pieces.
It's got to look this way every time. This is you got to set the mold and be like, guys, what do we no, here's the mold. Right. It looks like this. This is this is our full, because sometimes there's different levels of renovations. Right. Here's a full one. Here's a full turn. Here's just a quick turn. Here's a make ready.
Yep. Exactly. So very important to be on it day one. If you're still figuring that stuff out after you close the property, you're behind and likely losing money.
Yeah. So Kyle, we set the game plan. Now we're getting into it. So now we own this thing. And we're now looking at it from a month-to-month deal, right? What are we looking for?
Yeah, we're looking at a bunch of different trends. We've got a software system that we use for KPIs, which is a dashboard that gives us all sorts of things. But the one thing we use a BI dashboard through RealPage, and RealPage essentially integrates with our Yardi property management system. Okay. And what it does is it takes the information and it spits out KPIs and graphs and charts that we review every week to make sure, and sometimes daily, depending on what's going on, to review that data. And what we want to see is positive trends in every direction. But there's a couple of key things you're always looking at.
We are just switching over to RealPage. We're going to use RealPage, the whole thing, not just that piece, right? The whole integration with it. one RealPage, one site plus, but the dashboard component is money, dude. It gives you so much insight into your business. Like I feel like I've been in the Stone Ages. I've been using Appfolio, and like that's the bolt-on version, right? We've hacked our way through like Excel reports, and it's so cumbersome. And finally, I was like, I'm done with this, right? And we went to RealPage and had a demo with them, and I was like, oh my god, this is going to be like coming out of the dark ages. So excited.
It is a lot of information, the first step is getting that information, but the second step is kind of knowing what to do with it and digging in deeper and spending the time on it, which can be overwhelming. But, we've gotten it down to a system on certain things that we look at to hold our property management company accountable. And it's a tool to ask the right questions, right? Yeah. And it's enabled us to do that. And we're really excited to be working with them.
Because it also, that helps track like your conversions.
Yep.
Right? Your leads to leases. What happens in the middle of everything? Because that's really, one of the aspects of this business is tenants, right? Make sure we have, keep full. We want to keep 100%. And it's that follow-up and the closing percentage ability, like to see where is the choke point.
Yep, exactly. So I always use Neil Bawa's tool. He calls it LACEL, which is leads, appointments, showings, applications, and leases. And you track the conversion ratio in between each. And you want to be able to understand, where are we having an issue? Is it applications to leases? Is it leads to appointments, et cetera, et cetera? And that's where you can then say, okay, the issue is here, not here. Like I was talking about earlier, you want to ask the right questions. And that's kind of what that's been able to do for us as well.
It really is such good. I've had Neil on, and Neil's actually getting ready to speak at one of our events. And Neil's super, like, he's got so much information, it's almost scary.
Yep.
Right. But really, that's the other piece, is really it's getting the data, right? And understanding your data. That's, I think, the biggest problem with most owners is they really don't know their data or understand their data. Would you agree?
Yeah, I agree. And I can give a great example, and kind of going back on leases, there's something called a lease trade out. What is the new lease versus what is the old lease? So are you making more money or less money on a new lease? And if you just look at the summary of it, it may say $250 lease trade out on these 6 units, which is fantastic. But if you go peel the onion back a layer deeper, you can look at each unit, and you may find out that 2 of the units were just renewals that are actually making less than they were before. So it's always important to kind of peel back that, the onion layer further, like I said. But the other thing we're able to do now is, okay, what's the exposure on 1 bedrooms versus 2 bedrooms? Do we have only 1 or 2 1 bedrooms coming up? And if you can jump up the rents on those because you have limited exposure. And so a lot of these KPIs, those are the things that we're looking for 2-3 months in advance. Hey, how many leases are due in the 1 bedrooms? Because we're almost full. We can be more aggressive with that, or we can be more aggressive with the renewals,
right?
Because we don't have a lot of availability.
And when we talk about aggressive, the word for aggressive is called, we raise the rents, just so everybody understands what we're talking about. It's called making more money. Right.
Exactly. So, and there's all that stuff that people just don't understand.
That's the job, by the way, right? So that is the job of really the asset manager, is to push not only just the business plan, but to push growth, right? So like, because we have the same example, we have a property in Yuma where we're 100% full. And so this was my last call with my manager, was like, hey man, I see that on your deal, we've got a 3% renewal rate. Like, no.
Yep.
Make it 5 until we get pushback. So like now, all our new renewals that are going out 90 days from now or whatever, like, we start 90 days in the rears, right? When we start, and we give them what the renewal number is. It's now, instead of 3%, it's 5.
Yep. And
that's just what it is, right? I'm like, dude, well, and if you're not watching that stuff, what'll happen is you just everybody gets kind of in their laziness, right? Or just like, it is what it is, right? Yeah.
Yep.
Yeah.
Yeah, I mean, that's what we look at too, is a lot of people say, oh, we're 100% occupied. That's a good thing. I actually think of it as maybe a negative, and it's because you're not pushing the rents enough. So there's opportunity being left on the table. So if you're at 100% occupancy, you should be trying to push the rents a little bit more and test the rents. Don't be too aggressive, but, take it out to a couple people and see how they get it. And you never know, maybe 5% is now the standard. You
can titrate it, right? It's like playing, this is my favorite part of the game to play, right? And so now, how do you mess with the sales or your leasing staff at all, or do you let your management company do that?
We do. So we hold our property management company accountable. Every month we do what we call the secret shopper report. And what we'll do is our assistant goes online, she'll start a new Gmail account, and she'll go on apartments.com or apartment guide or whatever it may be called under a fake name and apply for an apartment and ask very specific questions. And we see how long it takes for them to respond. We'd like for them to respond within an hour, but did it take 2 hours, 3 days, no response? And was the response intuitive, meaning are they answering the questions or was it just copy and pasted? Was it welcoming? Did it have links to local jobs in the area and local shopping and pictures of the property? So we do that once a month. And to be honest, it's not always good. Sometimes they never give us a call back. And that's where we can show them the report and we can look to make sure and see what happened.
Coach and train, and then if not, then it's not, then you got to make real decisions on staff, on people, right?
So those are things that we do on an monthly basis on all of our properties.
That's great. And they already know it's coming. So now, and by doing it monthly too, now insured, everybody knows you're watching.
Yep.
What you track gets paid attention to. What you don't track, no one cares, right?
Exactly. And same thing when you're visiting the property too. If everything looks good when they know you're going to be there, I mean, go to your property sometimes when they don't know you're going to be there.
Unannounced.
Yep, because that's when it's going to look how it usually looks, right? If they know the owner's coming, that thing's going to be spick and span. And so we always do things like that to hold them accountable. And it's not to say, hey, we got you, you're not doing your job. It's to work together with them, to partner with them, to improve on their processes so that we can build it together. We want to grow with this property management company, but the only way to do that is to partner on executing your business plans. You
really have to. And that's the part, is like, they should know that I always try to make one site visit a month or a year announced, and every other one is unannounced.
Yep.
Right. We have one announced, it's the official visit, but after that, man, it's all bets are off.
Yep. And I love that.
It really has to be, because that way you get to see what's behind the curtain. Right. And there's nothing better to roll up and they're like, dude, if you see, like, I rolled up one and you're like, Trash City. You're like, what in the world? Who's getting fired today? Right. Yeah. And I got to calm myself down. I get on these properties sometimes. Right. But that's the reality, and don't shy away from it, but you can correct it, but it's got to be done. It's got to be done consistently. So that's part. So what do you feel like your biggest growth piece that you add in the asset management game? Like, how are you able to grow your guys' company and stuff like that?
Well, we have an asset management summit now, and that's kind of something that we do, and it's free just to educate people on it and just to grow people in that space. But essentially, the way we're able to scale is now we're not just looking for properties that, hey, are classic units that you can put 10 grand in and bump the rents up 300. I mean, we've got the operational piece as well that we can streamline. And so we look for a lot of operational inefficiencies where there's just either the property management company is not good. That's one way we've done it, is we've targeted property management companies that we know do not do a good job. And those are some of the properties we want to go after. The lift is heavier in the first couple of months to get everything squared away, but ultimately there's just more value to be had. I think a lot of people only look at the income lines when they talk about value add, but expenses are just as important. Anything that controls the NOI should be looked at. And so we look at it from an operational standpoint as well.
Yeah, that's a great idea. That's to target bad management companies that suck and find out what they're managing.
Yeah, we've done it, and we've gotten a couple of properties that way. So, and it's nothing against them. I mean, to be honest, I would say 7 out of 10 property management companies are just not good. So I think that is an area where we focused.
So how do you find the best management companies?
So, we're very market specific. So we invest in Arizona. And so, we don't need to go find a ton of different property management companies. So we called and met with 10, 15 companies when we first went out there. And over several months while we were first looking for properties, we got to know them. We got to see how they responded via email, what their communication systems were like. We met them on properties that we toured, got to understand their knowledge of the market. So we took a long time, I would say 3-4 months, to finally pick one property management company that we went with. But we took a long time to vet them because we knew we wanted to be in the Arizona market for a long time. If you're out there in multiple markets, it is definitely more difficult. But I always tell people, make sure the property management company has infrastructure, meaning they're not mom and pop. The owner's not the one that's managing everything. There's, a payroll accounting team, regional managers, things like that. But also get referrals from other investors. I mean, that's huge, right? Because they know if they're already hiring someone, that's going to be a big deal. But everyone wants to see something a little bit different than another. So for me, I always tell people take an extra month to choose a property management company versus just hiring the first one that someone refers.
Yeah, it's really got to be, a lot of times, go to some of the nicer assets, find some nicer A's and B's that you like, and really go find out, and then ask them, like, what's your top 3 management companies you think are the best in the area?
Yep.
Because a lot of these people have been in the business. They know, oh, MEB was great, or, that's one, that's an Arizona one, by the way, that's Tucson.
Yep. Yep. The other thing I would suggest you do too is, even if you decide to go with someone, go shop some of their properties, go to their property, walk it, talk with the staff. Are they well trained? Is the property clean? Because that's going to be a reflection of what your properties are going to look like. So if it's completely dirty, the staff is, not dressed well, they're not professional, that's what you're going to get. So make sure you do your due diligence on the property management team, not just the property.
Yeah. Here's the real question. I've asked this to a lot of people. Are you one day going to take this in-house management side?
So for me, my answer is no. So I used to work in property management in the golf business. So I was a regional manager for a golf management company, and it's a grind. And like I said earlier, the margins are very small. The only reason you do it is not to make money, but it's to have control. So as long as we have a property management company that can continue to be flexible and work with us, I don't want that in-house, because it's employees, and employees are the hardest thing to deal with and manage.
Yep. I share the same sentiment, but as I'm getting bigger, right, I'm almost changing my tune on it, right?
Okay.
Because
and we may change ours too, but
it's very interesting to see. If I interviewed myself, 5-6 years ago, I would have said, "Oh, hell no, that's not, no way." But the only way I would do it, so if I am going to do it, Kyle, what I'll do is I'll hire that one person that's the CEO. And then they'll run it. Yep. I'm just going to be chairman of the board, but I'm expecting to make zero money out of it.
Yep.
Right? Because I'm already spending this money every month. I don't care. It's already gone. So I just but I want control of the product at the end of the day. And what's really sad? This is my only real reason, is I want to have what I call a manager in training program, an MIT. And I just got to believe that you get enough units and you've got enough business that you can then create account from each property that funds a training program within your company. Because that's the one thing I feel like that's missing in our business. Nobody really has trained managers ready and waiting to go deploy.
Agreed. I think it's a very difficult thing to find, because you need a very specific person, right? I mean, yeah, you want them to have sales experience, but also they have to have that real estate experience as well. It's very difficult to find.
Or
so
you
I love
train
that idea.
it. Yeah, or you train
Yep.
it. So my thought was, you find these kids out of high school or college, fresh off ASU or AU, right? You get them, you put them through a training program. You make them breathe and live your culture. And then with the thought that they know that they're deployable, because they've got no kids, they're not attached. Hey, listen, we got a new property under contract in. Now I'm a national company, so we could be in Oklahoma. Great, you're moving to Oklahoma. But then they already know systems, procedures, process, and the way. I like to say the Mandalorian creed. You watch that? You watch Mandalorian?
I have not, no.
Oh my God, you're not strong with the Force, Kyle?
Maybe I should be. I'll start watching it now.
Listen, you gotta remember, this is, if you take away anything from this one. And listen, I've got 2 pages of notes so far, everything you've told me. But you gotta take down this one. It's called This Is the Way. It's the Mandalorian creed. So, he's a Boba Fett or whatever, but he goes, "This is the way." And then all the Mandalorians behind him, his whole clan they're all like, "This is the way." And I feel like that's what needs to be in the management people, is say, hey, someone says, "Hey, this is the way we do it." And everybody in your culture, they're like, "Yep, that's the way." Yep. That's all we know how to do. We do it this way every time. It's the capital group. That's what we do. That is it.
Yeah, I agree. I agree with that, because you're not going to get that with even the best property management companies, because it's just not the culture.
It goes
right?
on their payroll, right? Yeah, because they would have to self-fund that event, and nobody will do it.
Yep.
They want to know, like, let me know when you get that property, and then we'll go see if the people are any good, and we'll maybe try to hire some new ones, because we all know they already suck. That's why they're in a broken asset, right?
Yep.
All right, so didn't mean to go on a tangent there. Sorry, brother.
No worries. I'm gonna watch The Mandalorian now.
Oh my God, yeah, you got to get the Disney Channel. All right, so another thing with asset management that you is the disposition side of things, right?
Yep.
And so, what's the role there? Like, trying to get properties ready to sell.
Yeah, I mean, and that's a huge deal too, because how you position it, when you take it out, is it stabilized? Is it a value add? All those things are going to matter for the price that you actually end up getting. And then the other side of it is, you don't want to count your chickens before they're hatched too soon. You got to manage the property until the day it's literally sold, because you just never know. But what we like to do is, that asset manager is essentially going to work with the broker. After you get the BOV, you get the price, opinion of value, you select a broker, which we typically select the same broker that sold it to us, so we can continue to build that relationship. But, the brokers have helped us actually set up the property better for sale by just making some small tweaks. Hey, why don't you implement a premium unit on a couple of units, see what you get, see if that could be the value add for the next player. Hey, you're going to want to make sure you fix this item, because this is a touchy point with sellers right now. And they know the market better than anyone. So positioning it for sale is also something that will take several months to do. And again, you want to be proactive versus reactive. You don't want to just sell the property because it's doing well. So
there's something to be said about putting meat on the bone, right?
Yep.
Showing people another way that this is the way, right? Which is, in other words, that premium unit. Like, you go in there and you lease something, get a new, you put new cabinets or whatever it is, like you're upgrading anything that you have in there. It's way better. And then you get, $100 more in rent for it. You do 2 or 3 of those, and that's all you got to do. All you do is proof of concept.
Yep. And you're going to build in all that value, because everyone goes off of the year one pro forma now as far as the going in cap rate. And so that will be a huge deal. Absolutely.
I've always found too, so it's crazy how that works, right? And this is my experience, is like, if you leave something like that, like you do 5 or 10 units and it works, people will overpay because of the opportunity than they would if you did everything up and just left a little bit left, right?
Yep.
It's funny how that works, but if you go do that premium right before you're ready to sell, just to show that there is another level, and that then once it's confirmed with the 3 or 4 or 5 leases, that's all you need, and it's like creates a frenzy.
Yep, absolutely. People want value add over turnkey. It's plain and simple. They want to be able to drive that NOI and create more income for themselves, even if they are paying more for that product.
Yeah. So typically, how long do you guys try to hold your properties?
Typical is a 5-year hold, but every year after stabilization, we're taking a look at whether we can pivot off of our business plan or not. So, for example, we had one that was a 6-year hold. We ended up selling it in year 2 because the market actually improved. So the cap rates compressed tremendously. We stabilized the property. We're getting above average rents, and the velocity of our investors' money is better served selling in year 2 than waiting till year 6 in that case. Yeah. So we're always going to, reevaluate on a yearly basis.
That's a tough one. I'm a buy and hold like till I die kind of guy. And this has been my biggest quagmire, right? Is I know I should probably sell some of these assets.
Hey, it just depends.
Cap rates are compressed. Oh my
really
God.
Are. Yep.
I could get so much money, but I'm like, I don't know if I'm ready. I like the paychecks.
There's never a perfect time to sell. The way we look at it is just for the velocity of our investment.
But it is the velocity. You coined the term, and that's the why. Like, why do you sell a winner? Is because you can go make a crap ton of money and then go buy another loser that you turn into a winner.
Yep. Exactly. Yep. And you keep turning it over. So we just kind of look at that, and, maybe you want to double your money in 5 years, but if you take a look at the velocity of it and can sell in year 2, now you can triple it in 5 years.
Yes. Yeah. Kyle, that's a good analogy of why it takes, because people, I think, struggle with it. I know I struggle with it. Right. But the truth is that velocity of capital does mean something, and it really is a powerful force once you understand it. it can move the needle, like not just a little bit, like it could change your freaking life.
Yep, that's where massive wealth is gained.
Yeah. So what does the future look like for you guys?
Yeah, we're at the point right now where we're ready to scale. We've taken down 4 assets now. We've hired an executive assistant. We're going to be hiring on more team this year, two more team members, and the goal is to do 4 or 5 deals a year and really get into the $20 to $30 million space. Right now, we're more in that $10 to $20 million space. So we'll be competing with more institutional investments, but we do like the ability to scale. And that 200 to 250 unit property is where you really get the economies of scale. And so that's where we would like to be. And then maybe once we have, 10 or so assets, probably add a market once we really have a foothold in Arizona, and then possibly add a market, but continue to grow, hire a C-suite level of executives to help run and manage our business.
Yep. That's a great model, dude. And you're doing it in one of the best, hottest markets in the country.
Yep.
Phoenix. Of course, I don't invest in this market. I go, I can't do it. I'm in Yuma though, if that makes it, you make me feel better.
Hey, it's in Arizona, so
right?
You're good.
But what a tremendous ability to, because your average deal size 10 to 15 mil, that means you're raising on average how much per deal?
Yeah, probably 4 to 8 million, depending on, because we did one, which is an assumption, which is more down. So yeah, we're raising right about 4 to 8 million.
Yeah. And really that is, and then when people first start in this game, right now it's like a $6 to $7 million entry point. I feel like that's where most like decent deals used to be 3 million, right? How about some deals at 3 million? It's great. Like where are those
days? I wish, yeah, exactly. I wish we can go back to those days.
Those days are gone.
Yes, they are.
And that was not too long ago, and that's what happens. So that's the true game now. And I love how you're saying, like, listen, we already now know that we need to trade up and go to those $25 million tranche buy box, right? Because it does give you the economies of scale that you need. But the only entry point of that is more what? Money. Yeah, more money. And once you master the art of capital raising, we've not even touched that, but I'd like to scratch it a little bit. Can we scratch it?
Yeah, let's do it.
All right. So what are you guys doing to raise capital? Like, how are you getting your word out?
Yeah, I mean, for us, it's been that educational platform. And essentially for us, raising capital is about adding value back to other people and building that relationship. So, we're not the 506C where we're advertising to everyone. We really are trying to build strong relationships with our investors. You don't need 1,000 investors. You need 200 solid investors that you build generational wealth with over long periods of time. And so, initially we started out with a meetup, then it was a podcast, then it was an asset management summit, then it's going to be a book, which is next. But it's just kind of slowly adding value to other people's lives over time. And we're very high touch. So I have individual phone calls with all of our investors, all of our interested investors every other month, and just constant, consistent communication. I think that's what I talked about earlier was consistency. There's not a lot of people that can be consistent over the course of several years or even decades. People can be consistent for weeks and months, but if you can do it for years and years and years, you're going to really just crush your competition.
Yeah, and I'm going to take that a little bit further too, because I used to think that I have to be the guy that does all that, and I used to. What I've learned is I don't have to be the guy. I can have a guy that does that as well. So we're now hiring employees that are like Edward Jones financial advisors, already have or used to have a book of business and clients and people they know, but their product is stocks, bonds, and mutual funds. And so now we teach them our product and get them into our services, and they do that as well. So you can hire someone to raise capital for you. Even if they leave, you still own the records, right? So then you can put your new salesperson in. But I used to, in the beginning, that was all Corey's work. Corey's now starting to step back away from that, which was a great piece, right? Just so you can, so it doesn't have to be just you, but like that is the piece though, is actively touching them.
Yep, absolutely. And I don't think that I'll be the person that does it every time for the rest of my life either. But yeah, as long as you have someone on your team that has the culture and, this is how we do it type of thing, then yeah, absolutely. But it's all about high touch and building that, your investors need to know, like, and trust you. That's it. They're not investing in the deal. They're not investing in the same returns that everyone else is offering. They're investing in you and your company and what you provide and the value that you add to them.
Word up. All right, man. So as we wrap this thing up, any books you've been reading, Kyle, lately that's got your interest peaked or something you thought was really good?
Yeah, Shoe Dog from Phil Knight was really good. I wasn't sure how much I'd like it, and it's really, his story was really incredible, and that's a story of persistency and consistency. So I really enjoyed that one. And then I mentioned it earlier. The one that changed my life was CASHFLOW Quadrant by Robert Kiyosaki. Rich Dad Poor Dad, turned the light on, but then CASHFLOW Quadrant really made me understand where I need to be.
You put a lot more meat on the bone there, right?
Yep, exactly.
Yeah, because Rich Dad Poor Dad is very high concept. Didn't tell you about anything, right?
Yep.
Just that you should own something.
Exactly.
Oh, awesome. And if you could give any advice to anybody that's new or been in the business for a while, about, your growth and attitude, what would you give them? What would you impart on them?
Yeah, just be intentional. I think too many people get caught up in the whole fame and glory of buying apartments and raising capital, but really be intentional about what you're going to do and be consistent. I mean, again, I keep saying that and I sound like a broken record, but if you want to beat out your competition, just be consistent. That's all you have to do.
It is no harder than that. So if people want to get a hold of you or learn about this, your asset management summit, where do they find you guys at?
Yeah, the best place to go is amsummit2021.com. That's going to be in June 21st. It's actually a 7-day summit and it's completely free. So we're just trying to get the word out there that, hey, you need to understand how to run these assets that you're buying, these multi-million-dollar businesses. Don't put the onus on your property management company because it'll be a big mistake.
Amen to that. Listen, I appreciate the time that you have spent and kind of unlocking and demystifying asset management, because most people think it's just a fee that you charge and you get to take and accept, but it is way much more than that, guys. And if you're listening to this podcast right now, listen, think about where you're at in your journey, and do you want to make it to that next level? And if you do, the first step you've got to start is the one in between the two ears. Yep. It's your mind, right? Your mind is such a powerful thing. If you don't use it, you'll lose it. But if you believe it's possible, you can achieve it. Hold on, I just screwed that up. That's my tagline. I missed my tagline. Hold on. I'm going to say pause, reset, but act like you didn't hear that. If you believe it, you can achieve it, and your paradise is possible.